Hello friends, good morning. Myself Pranjali Shah, Derivative Analyst Anagram Capital. We start with an outlook of mild bounce back are probable ahead if the trend in the derivative market are an indication. As anticipated and mentioned, market witnessed extreme volatile week. IIP data, WPI inflation numbers, earning from IT majors, Infosys kept markets on tenterhook through the week. Market posted loss on 4 out of 5 sessions and finally ended the week with hefty losses. On weekly basis, Nifty fell sharply by 250 points and closed 4.23% lower at 5654.55, whereas Sensex 2 over the week fell by 831 points and closed 4.22% lower at 18,860.44. In F&O, overall open interest rose by rupees 14,941 crore to rupees 1,47,924 crores over the week. In the quantitative terms, open interest went up by 11.24% to 258.64 crore shares from 247.40 crore shares in the previous week. Open interest in stock future in quantitative terms went down mildly by 0.16% to 198.44 crore shares over the week. Spot Nifty during the week witnessed 4.23% cut, which suggests of unwinding of long position in stock future segment. This trend was also observed in sectors like auto, fertilizer and chemical, and sugar. Volatility index, which is India VIX, witnessed a sharp rise of 14.36% to 23.81 from 20.82 in the previous week. Volatility index is a measure of market's expectation of volatility in the near term. Nifty open interest PCR slipped to 0.9 from 1.03 levels over the week. This drop in Nifty OI PCR is largely due to significant addition in calls open interest of around 5700, 5800 and 5900 strikes. Over the week, Nifty calls January series open interest rose sharply by 34% to 5.7 crore shares, whereas Nifty puts January series witnessed addition of just 6% in open interest to 4.04 crore shares. Outlook for the week: market witnessed second successive sharp weekly fall. Indices plunged by about 8.5% in last 2 weeks and are underperforming global markets. Rising inflation, fall in industrial output and likely increase in interest rate by RBI and policy meet scheduled on January 25th kept markets on tenterhook in the last week. As we had mentioned, corporate performance too was disappointing. Very low Nifty open interest PCR of about 0.9 suggests that the action is bit overdone and mild bounce back are probable. However, sentiments are better now and confidence level are very low. Bounce back therefore may not translate into big rallies. Volatility is likely to remain. FII's action in cash market need to be keenly watched as they are consistent seller in 2011 so far. Going by option distribution pattern, markets are likely to remain in the range of 5500 to 5800 in the coming week, with action more specific to individual stock. Thank you. Have a fabulous trading week ahead and we hope that all of you earn good profits. Thank you.